September 22nd. Today we're going to cover the volume tools, the volume profile, and the Vwap. I believe Clint sent out kind of a primer video on these two buttons. Well, maybe not so much on the Vwap button, but on the volume profile. So those of you that have had the toolbar for a while, I'm sure you're familiar with it. And all of the different views that you can get from this button right here. This would be the fixed scale. Point of control is a fixed scale. It's all the way at the right margin. It's the POCFS. That makes the point of control, the end of it, even with the right side of the margin, and then you can back it off in sets of 20 pixels from the far right edge. And then of course the lines that are displayed here are going to be determined by which ones you've allowed to be displayed, which is this button right here. I'll briefly go over the different buttons, but I want to cover more how to use it, how I use it. Some of you, I'm sure, are probably more familiar with the the original methods from market profile. But this is using pure volume, so we're not using the amount of time that we've spent at each price level, which is the original market profile. But this is purely based on true volume traded at each price. And what's cool about the way that we've done this is that you don't have to download the data for the entire length of the chart going all the way back. So let's look at a tick chart. If you were wanting to use a volume profile tool, such as the ones from Order Flow Analytics or Golden Zone Trading, even Gomi's volume profile on Big Mike's, which is free, which is probably the best one available, really. It may not have all the different bells and whistles that some of the other ones have, but as far as the way that it's built, I'd say it's the it's a really nicely programmed tool. But the problem with that, with all of those tools, is if you're loading the true volume for every price that was traded, for instance, right here, we're loading the exact number of contracts that were traded at every single price. That's what this display is. See this bar right here at this price at 127.20, we had 2,926 contracts traded there. Right there. That's the size of the point of control. With the new version, we'll have you'll be able to see the total number of contracts. And then, like I've said previously, once these next updates are finished, then we'll finish the profile per swing indicator, which will be a new indicator, which will give you the different profiles of whichever size swing that you selected, which is more along the lines or more in tune with the way that I use volume profile. So I may not, you may not, if you know very much about volume profile, or if you've read much about it, then the way that I use it may seem a little bit different from the way that you've read or seen other people use it. One thing that I do have in common, well, I learned it from him, DB Vwap, the order analytics guy, is to look at individual swing points and find the point of control of these different swings. So for this little swing high, you see we have the point of control here. Well, it doesn't line up very well in this case, but if we were looking at just those three bars, which we can do, we can back it up here. Look at just those 3 bars. Where was the point of control of those 3 bars? You see it? Isn't that cool? You see that pretty consistently over and over and over. There we go. Isn't that cool how price breaks from that swing high, and when it pulls back right to the level where the largest amount of contracts traded. 306 contracts traded at 12,965, and that's where it pulled back to, and I think that's where I shorted it. Yeah. Sure. Because of this. Well, I mean, we found the high based on market geometry and volume divergence, triple divergence on the 5-minute, volume divergence on the 20-minute, I believe. Yeah. Really a number of reasons for this swing high. We can talk about that too, actually. But that's one of the ways that I use the profile, is for looking at individual swing points. You know, say a 3 or 4 bar pattern for the end of a move. And then if I miss the swing high, then I'll look to get into that pullback. And you'll typically see a rejection if it's going to fail. I mean, if you've got it right, you've done the analysis right, and you've identified the swing on that pullback will fail typically right around that point of control of the previous swing. So when you look at this on a 2-minute, you look at it and you're like, well, you know, how do you find something like that? Because on the 2-minute, it just looks like this. And if you didn't have all the tools that we have, then how would you identify that swing? You know, in the room, we identified the swing high here perfectly. And I told everybody that's the swing high of the day. And then we get that pullback perfectly to short. I just happened to get out way too soon. I got out right there on a break of that churn bar, which was unfortunate, but I was going to lunch, so I didn't want to lose what I had gained, because I did lose what I had gained from the short in crude, but then we'll go over that too. I got back short, and I think I made about 750 on those 2 contracts. But anyway, when you're looking at it just on the 2-minute chart, you know, it's a little bit, it's kind of hard to use the tool like this on minute charts. I mean, it's I'll show you some examples where it does work well, but when you're looking to fine tune an entry, you're typically going to do that on the tick chart with the profile, or a 1-minute. I really don't use a 1-minute too much anymore because people gave me such a hard time about it. But in some cases, it really is the best chart to use in conjunction with the tick chart when you're really trying to fine tune that entry and get your risk down as low as possible. But see, here we have to select all 3 of those bars, and that's really too much to look at. I mean, you can, just by eyeballing it, you can see that if we're looking at just the top pattern here, you know, where's the majority of that volume traded at? It's obviously between these prices here. And then of those 5 prices, where's the highest volume? Well, it's right there at 12,965. And isn't that where price stopped on a dime? And that's where I got into my second contract. The stop just above the high there. I think I had to stop right on the high, really. And then it rolled down. So that's one of the ways that we use the profile tool. Now, just to go over some of the basics of it, I always keep the toolbar on a chart all by itself on a workspace all by itself. And that avoids any complication with, first of all, knowing where the toolbar is. I see people still do this. I've talked about it 1,000 times. You don't put the toolbar on any more than one chart. It's just one chart. You don't put the toolbar on every chart like you would do, like you would expect to do, or like you would do with other toolbars. It's just a one instance of the indicator controls the entire NinjaTrader environment. And anyway, I got distracted. So yeah, all of that, this controls the entire environment. So you only need it on one single chart, and I keep that one chart on its own workspace so that I know right where it's at. So here you control what's shown on the profile. And that is right here. This is all completely redone in the new toolbar. You'll all the properties for every single button will be within that button. And you see now we have, you see how it shows up? What the button is? It's a trend channel. This is add alert, recurrent, tells you the settings of it. Profile will do the same thing. We may have a little graphic. I'm going to do individual graphics for these buttons just to make it look a little fancier, since it is a pretty fancy tool. I want it to look fancy. But you'll be able to right click on that button and then you'll see this menu pop out. So we'll order these properties a little more methodically, a little bit more intuitively than the way they're currently set up. And then we'll have alerts for, I don't know if I'll have alerts built into the profile or just allow you to add an alert to different aspects of the profile. May have both. You may be able to check, check the box that you want the alert applied to, kind of a thing, or something like that. But anyway, somebody was asking about if I had, I don't know, are you in here, Bruce? Let me see. No. First of all, are there any questions on the profile tool? Anything specific anybody wants to have addressed today? Somebody had asked me about, do we have anything to do with the footprint? And no, I don't. I think the footprint is overkill. It's cool. I mean, it's very interesting information. I think it's overkill. And I think it causes more second guessing and doubt than it does confirmation. I don't need all of that extra information, and I certainly don't need Ninja slowed down any more than it already is from the tools that I use. One thing we do have built into the profile tool is this volume cluster per bar. It's showing up as the 30% toggle. So if these are set to false, then you're not going to see the button for turning this on. And this is going to show a little box on the bar where the greatest amount of volume, where 30% of the volume within the smallest range was traded within that bar. All that's covered in the video? Okay. So Clint says all that's covered in the video, but if this is enabled, then you'll have this little button pop up. See, it's downloading the data, yeah. And there's a bug when it merges the contracts. As you can see here, it's not displaying the data up in here. But that's all going to be fixed here in the next version. I think it's really only with the merge policy. But this is that 30% right here. You see the 30? So when you turn that on, it will make the profile a little bit more transparent, and then it will display the 30% the greatest amount of volume within the least number of ticks. Right, so basically the largest concentration of volume within that bar. It's kind of a difficult way to describe it, but it's 30% of the total volume, which takes up the smallest range. Right, so the highest concentration within the least number of ticks, basically. You can see this is part of that bug right here because this is where it merged. It's just some kind of strange thing that Ninja does with the data. So typically top-heavy bars will indicate a reversal most often. See how this is a bottom-heavy bar? And then it reversed up. These are two top-heavy bars. They reverse down. This is a bottom-heavy bar, and then it goes sideways. Top-heavy bar, then it turns down. Just because it's bottom-heavier, or let's say just because it's bottom-heavy doesn't mean it's going to reverse up. You would just prefer to see that to confirm a reversal. But then again, I don't need to see that because I also have the relative volume. So you won't typically see me turn this on. When I have a separate tool for it in Ninja 8, I will have this on every chart, but I don't typically load the profile on every single chart where I would want to use this information because it can slow down Ninja. This one doesn't really slow down Ninja, but if I had it on every single chart, then it might start to actually slow it down a little bit. So it's basically just a confirmation tool, right? But all of the properties that would affect the profile are located here. You can change the colors. Where do you want the control pop-up? Do you want it to be automatic or whatever? I do it all button controlled so I can select it, turn it on or off. And then the performance mode is all talked about in that other video. It's going from tick data to one range bar, which is just a little bit faster than a one tick bar. And then we go to 1 minute bars after 20 days back. You may have this set to 5 or 10 or 7. I'm typically using tick data or range data on the smaller charts, and then on 240-minute chart or something like that, I would use 1 minute data because it doesn't have to be precise on a very large chart. All right, so we do have a question. Daniel, what is the basic theory of volume profile? As I understand it, where volume is greatest, there's support and resistance, and where there is little volume, there are areas where prices run quickly. Yeah, so there's a lot of theory on that. Let me give you an idea. So we could talk about the theory all day long. Let's just do it like this. All right, let's say we have a distribution here, and then it comes down. You get a little sharp piece here, comes down, little node here, and then real light volume right in here, and then we get another distribution. Let's just act like this entire thing is just one big chart. All right. So what people have done in the past is look at this entire amount of volume as one profile, and then they'll divide that up into percentages, and they'll take 70% of the volume, of the total volume, and they'll find, to describe how the value area is found mathematically is a bit of a challenge, but the simplest way that I can make it so that you can understand it, if this is all 100, right? This is 100%, this entire profile. All right, we're looking for 70% of that volume, 70% of this volume to fill the smallest range possible. So if this, let's say this range is 100 ticks wide, all right? I'll look at, mathematically in an algorithm, I'll look at each section of the range into an entire series of ranges, all right? And going down as small as I can, so we'll look at the range from here to here. Does this range make up 70% of the volume? Well, it's only 65. Okay, so then I need to make it a little bit bigger, and then look at this. Is this 70% of the volume? Well, no, it's actually 75% of the volume. So then you kind of make that range bigger or smaller and move it up and down until you find an exact level where you have exactly 70% of the total amount of volume that transacted within this range. You have 70% within the tightest range possible, within the smallest range. Does that make sense? So let's say that for this case might be from right here to right here. So this would be our value area high, and this would be our value area low. And then the point of control might be right here. All right, that's typical volume profile theory, right? But how, and then people would say that this would act as, if you're coming up to it, this would act as resistance. If you break through it and pull back to it, it would act as support. This would act as support if you're coming down to it. If you broke through it, pulled back to it, it would be resistance. All right, but what is actually the case is that each of these distributions need to be looked at individually. All right, so you've got one distribution right here. This is one distribution. All right, we need to look at this as being 100%. This distribution, this is 100. Clint says this is all in the video as well, but it's probably a good refresher. So 70% of the volume of this range that would make the tightest range within that range possible, take up the least number of ticks, we would have a value area high right here and the value area low right here. All right, so the bottom of that distribution will act as resistance, or if you're coming down to it, would act as support. And then the top of the distribution would act as resistance if you're coming up to it, or if you're coming down to it, would act as support. Okay? Now when you get down to a smaller level, let's say on a tick chart or a 2-minute chart, even a 5-minute chart, the actual point of control will also be a very important number. So that precise point of control will also be support or resistance. When you get out on larger charts, if you're looking at, most people use volume profile on an individual day-by-day basis. I don't use it like that. Tim does, but he uses market profile. Mike does. Some of the guys in the room probably have their own thing going with that. I just like to look at individual swings because that's what makes the most sense to me. If I'm looking back over a very large chart, and this is another reason why I use now non-back adjusted data, because I want to see the true prices that were actually traded. If I'm looking back over a period of 2 or 3 contracts that have been merged together, well, those previous 2 contracts that have expired, there's nobody that owns those contracts anymore. So the idea that we're coming back into an area that has a huge amount of volume that was traded there, well, nobody owns those contracts anymore. So you can think of that as being an area of support or resistance because somebody had previously bought at those price levels. But the truth is nobody owns those contracts anymore. So there's really, the theory behind it. In stocks, it makes more sense. But in futures contracts that expire and then merge together, I think it makes less and less sense the further back in time that you go, which is typically why you don't see me put a volume profile on the larger charts too often. Sometimes I will, just to kind of have an idea as to, what other people might be looking at, but, I don't put a lot of faith in volume profile when it comes to your larger time frames. But when it comes to faster charts, or even the 60-minute chart from this low, we're within the same contract here. The contract started here. So I am interested in the volume data that's been traded within this contract. That is something I'm interested in looking at. Does that make sense? But really, you want to take individual distributions. Forgive me, I forgot one part of it. You want to take individual distributions on their own. So I would say, just looking at this, and of course, remember now, we're only using the volume profile as a confirmation tool. We're not trading volume profile. I'm not trading volume profile. You might, but that's not something I'm interested in. I'm taking this as confirmation. It doesn't necessarily have to be there, but if it is there, then I give the area more weight, and I may put on more contracts, let's say, if the profile seems to agree with it. You see what's happened here? This is a top-heavy swing right here. We've got a lot. Well, let's look at the swing individually, and then I'll come back and talk about what I forgot to say. But looking at the swing individually, we have a very top-heavy swing. So this is probably a major reversal. And we may come all the way back to this cluster. All right, but I want to look at these distributions on their own. So I would say, just looking at this and trying to eyeball a value area high and low for this distribution here, I would say that's a value area high, and this is probably a value area low. So if we can break out, maybe come down to this little distribution, or even reject from this low volume node. Also, the low volume nodes will act as support and resistance. I guess the theory is that price has not been interested in that level very much. Nobody's really interested in it. So it tends to hit those and reject very quickly. And I'll go over the reverse of that. But let's say if we come down and reverse back up from here, or this low volume node, probably from right in here, I would imagine, then we may come back and hit the underside of this distribution right here. And if we did that in conjunction with, let's say, an upper median line, or a number of different areas, whatever, if by the time we hit that, this upper median line is coming down and we're hitting both of those at the same time, well, I would count this as another area, this volume profile. So that would be another area for that trade. Follow me? MJ, I can't today, but Clint could get on with you. Is there something specific that I would need to do? Clint could probably help you. If you just write into Clint. Can you respond to MJ? I made you a panelist. So that's one of the ways that we use the profile. Now, if we're looking at this again as multiple different distributions, let's say we had a distribution up here, and then we have an area of very low volume right here. We have another distribution down here. Once we break the value area low of this distribution, and we come down into this low volume area, price does tend to move very quickly through these low volume areas, but only if they are pretty large, let's say 30, 40 ticks or greater. Once you get down into that low volume area, it's typically a previous wide-ranging bar is what it is. That's what it most often is. It's where you've been coming up and going sideways, and then you hit this and you go straight up, and then you start going up and sideways and like that. And then when you come back into that wide-ranging bar area, if you come down into that area and you've done a reversal back down, you'll tend to rush right through that area once again. All right, so when you see these very low volume areas in the profile, yes, price does tend to rush through those areas, and you can go back and verify that for yourself. It's actually a pretty fun way to validate the whole volume profile theory stuff, because you can validate that pretty easily. All right, so that's kind of the basics. Now, the other tool is the Vwap, right? So if we're looking at our let me change it over here, 576. All right, you can all see this this indicator here. Let me just turn all this off. This is the volume weighted moving average. Sorry. It's the volume weighted average price. Volume weighted average price. It's just a running summation of all the contracts traded at every price. It's a pretty simple equation. All right, what's not so simple is the standard deviations above and below it. And this guy's done it correctly, and we've used a variation of his algorithm for the standard deviation bands. So this is second standard deviation down from the volume weighted average price, and this is the third standard deviation. So this little blue cloud here, this little dark blue cloud, is considered oversold, and this dark blue cloud above is considered overbought within the Vwap. All right, so just within the Vwap, and we have two different starting times for this on the two charts that I have it on. I have it on the smaller, faster tick chart, which I will start at the open. For the euro, the open is at 720, which is very odd, but it's at 720. All right, and then the session open on the 2-minute chart, we have the other one. The session open is obviously the previous close. Well, it's the reopen after the close, which is right here, and that's where it starts building. So we have two volume weighted average prices developing as the day moves on, right? Okay, well, another thing that we want to look at, and you don't see me use this as much as I should use it, but another thing we need to look at, should look at, is the volume weighted moving average of each individual swing. There was a technique, what's that guy's name that developed the Midas technique and wrote that book about it? I can never think of his name. Smart guy. Anyway, I want to say it's not Crable, it's can't think of it. Anyway, you can look up the Midas technique. Midas, the gold, everything he touches turns to gold. King Midas. No, Levin. Yeah. Levin. I think his first name now. But yeah, anyway, he wrote a book on the Midas technique, and he's basically applying the volume weighted average price to individual swings. He has a couple of other ways of using it. One is as a bottom and a top finder. One is as a stop line. I think there's a couple of different variations on it. But what we did is we added just the volume weighted average price per swing. Well, for any bar that you want to start it from, you select the bar that you want to start it from, and then you can scroll it to the right, but you can't scroll to the left of the start bar because we're downloading the data, for the individual swing that you selected. So we're running the volume weighted average price from the bar that you've selected to the current bar and then updating with new incoming bars. So you can open that little thing up and then you see the little left tick that's kind of yellow, that little highlighted little left tick. You can drag that out and then update it. Okay, but you can use that as a kind of a, when it comes to moving averages, these are about the only moving averages that I use. It's volume based, right? When it comes to, a 55 period moving average or a 200 or, blah, blah, blah. Any movement to that or away from it is just a statistical, what's the word I'm looking for? It's just happenstance because of the period of the average. There's nothing special about moving averages, and there's certainly nothing special about a special moving average. When it comes to averages, the only ones that I have time for are volume-based because there really is something to this Vwap stuff. I can't program it in an automated fashion. At least I haven't been able to yet. But you can see this stuff happen every day. Well, let me see. Let's look at this. I think it was maybe crude oil. One of these charts is just a beautiful example of how price keeps returning back to the volume weighted average price when it's in a trend. And this does kind of help you identify when you're in a strong trend. But you'll tend to kind of ride the Vwap all the way up. It must have been crude oil. Let's see. Yeah, this was my short that I took. So I ended up shorted it here and then didn't get out here like I should have, and then got out here and then got stopped out. But then I shorted it here. Almost got stopped out within 3 ticks of my stop right here. And then finally got out down in here. And this was really just a beautiful, beautiful move down. It was perfect on the larger tick chart. I posted a chart of it in HipChat. But anyway, let's see. I think it was this swing from right here. So what kind of happens, it may not have been this one, but what tends to happen is as you use the Vwap as support, and this isn't the example I'm looking for, but we'll go back and find it. As you use this Vwap as support, let's use the higher time frame. 1 second. So it's not as crowded. Basically, this might be a fairly decent example of it. But once you move back into the value area, which is considered this, just another way of using volume to find a quote-unquote value area, that would be the first standard deviation below the Vwap and the first standard deviation above it. right? That would be considered the value area. Once you start getting up into the overbought cloud and then you come back into it and then you reverse back up off of it and into the cloud again, when you get those corrective moves, those ABC moves back into the VWAP, and then you start going up again, that becomes the new point from which you need to anchor the next VWAP. And then you'll use the VWAP from there as support as you keep moving higher and higher if you're in an uptrend. You see, so then you start using that VWAP as support. And then when you move away from that, then you draw from the next one where you had the last touch, which would be here. And then here. And then you keep doing that as you keep working your way up. And then you ultimately will use the nearest one as a stop. Now, I don't get, real heavily into the whole Midas technique. To be honest with you, I haven't read that book in 6 years probably. Because I don't really do strict mechanical rules for my trade management. Maybe I should. Probably will end up doing that as I start developing with Blackbird. But the track record that I have for the way that I'm currently doing it, I can't say that I have, a really strict set of rules. I tend to have targets based on the areas that I've traded from and the time frames from which the trade is occurring, and then I'll try to manage the trade down to those areas. And if we get something like volume divergence or some kind of what seems to be a clear potential reversal, then I'll get out. So where I got out today is an example of that, and I'll show you that here in a little while. I think somebody just asked a question. What am I clicking? I'm clicking on this VW button. That's the VWAP. Right here. This blue button. And if you don't have it on the toolbar, then it is this. Well, I've already added it, so it's what in the world? Where's it at? VWAP tool right there. I don't get anything when I click it. Oh, okay. Well then, do you get this little box right here? Okay, click on that box and then click this button right here. I don't know why he made that as an option to display nothing. Yeah, I'm going to take that out in the next update. It's been a problem for other people as well. Yeah, there shouldn't be an option to display nothing. That defeats the purpose of having a button. Yeah, so there are multiple, well, there's 3 different options evidently, but there should be only, well, there's 4 options, but there should be only 3 to display the VWAP with all 3 bands, or I guess you could say the first standard deviation above and below, the second standard deviation above and below, and the third standard deviation above and below, which is the top of the upper cloud and the bottom of the lower cloud. Click on it again, it displays nothing, which it should not do. And then click on it again, and it's just the VWAP line. So some people will use this as a stop. If you break it by more than 3 or 4 ticks. I know some people will use it 1 tick below the VWAP as a stop, and I don't think that's a good practice at all, because the VWAP is not, it's not an area, all right? Or how should I say that? It's not like a trend line or an area in the market geometry. It's not a precise level, I should say. It's a range, because it's an average. It's created from an average. So therefore, it's not a precise. You shouldn't consider it as a precise value, if you follow me. You understand what I'm saying? Because it's an average. It's made from an average. So this is the range that it should be treated as. And obviously, if you're using it from a swing low in this case, these first several bars are not necessarily going to be as useful for that starting point. So you would probably want to wait until you get out and away from it to begin trying to use that, as support. I think they're typically most useful when you get a really sharp reversal out of an area, and then as you start to pull back, I think that's when the VWAP becomes most useful. So you'll tend to pull back right into that sweet spot, which will, sometimes coincide with a trend line or one of your fib retracement areas or something. All right, but yeah, some people will use this as a stop line, and then obviously using the upper cloud for an area to reject off of. I built a template for a guy, for Trevor actually, which looks for divergence signals from the session VWAP. So that's, occasionally that's a decent signal. It's not something you could trade Paul Levin. That's it. Paul Levine or Levin or Levine or whatever. But yeah, it's not something you could fully automate. But sometimes, and we had a really good example of that. Actually, I want to say it was the low that we had. Yeah, it was here, right here. On the 2 minute, really on the 5 minute, but it shows up on the 2 minute as well. If you're at an area, remember, if we're trading with the trend on, say, an hourly or the 240, and we're trading a correction on that hourly or 240 minute chart, it's going to look as if you're trying to buy a falling knife. If you're trying to buy a low, that is what you expect to be the end of a correction on that hourly or 240 minute chart. It's typically going to look like this, right? And what do you have right here? Well, if you're buying the first divergence from that VWAP cloud, the oversold portion of the VWAP here, then you would be buying it way too early, obviously. Let me link these together so you can see how this one came together, if it came together at all. Where are we? Yeah, right here. That's this swing low right here. What do we have there? Give me a second while I check this out. It's probably going to look quite a bit different on you, on your guys' charts, as far as, on the 240 minute. We broke this low, correct? On your 240 minute chart. We were talking about that this morning, right? Didn't we break this low? There we go, yeah, right there. On mine, we're about 3 ticks from it. So with a merged back adjusted contract, it's going to look like this is potentially an A, B, and then C down. So I don't really know what to make of this move yet. I guess we'll know soon enough. Kind of thinking we're going to go all the way back down. But we shall see. Anyway, the reason for the sell right here was that downtrend line. But of course, that doesn't quite show up on your charts if you're using merged data. And the difference is the non-back adjusted data is showing you the true prices of the previous contract, the true traded prices. When you merge them together, you're going to eliminate the gap that's created by the the time decay when you're splicing the contracts together. But anyway, at this low, you're waiting for, just as an example, the example that I had made for Trevor, to look for divergences from the overbought or oversold portion of the Vwap. Everything that I'm kind of saying is in reference to waiting for the areas that are reached in the market geometry or in the higher time frames or something like that. So all that to say that I'm not using the VWAPs or the volume profile on their own. They're always just confirmation tools. Right? That's not to say they're not important or useful on their own, but obviously, if you've been with me long enough and you've seen enough examples of it, then you know that the most important concept that we use is the market geometry, right? I think that's probably safe to assume that you guys fully understand that by now. So in this case, I don't even know what it was here, but it might not have been anything at all. Let's see. Well, it's a trend line from low to low. So you have at least that. Hey, Trevor. Yeah, so Trevor's in here. I don't want to spend too much time on trying to figure out all the areas that came together there, but let's just look at the 20-minute. So basically all I was getting at was you don't want to use the VWAP on its own. It's obviously a confirmation tool for use together with your other tools. So you're defining your entries, or at least the areas that you're trading from, based on the market geometry, right? Let's see. I don't know that, I think I just tried that. I don't know that I have any real areas there. I have the midline of this. And I don't know if you guys can remember me talking about this, but when I draw in, I'm sure you probably do from some of the old, some of you that have been with me longer, from some of the old original getting started with market geometry, when to use the midline as support or resistance. Does anybody remember that? When would you expect to use this midline as support in a downtrend? When momentum begins to wane and you begin to start diverge. Let's say if you're drawing a channel, a downsloping channel, on an hourly or a 20-minute chart. If you start getting divergence in the 5-minute and the 2-minute, and you're not anywhere near the bottom of the channel, that's when you're going to use the midline as support. All right. I want to see if there's some kind of trend line from back here or downsloping median line or something like that. That's what gave us the low here. And then the split of that channel, that's the midline here as well. So we have two midlines coming together. That's really about all we had there as far as on the merged non-back adjusted contract. Okay, I guess that's the main one there. That's the trend line from low. This is where we had the last bit of demand come in. So this is where the majority of the demand came in for the last big leg up. And this was the beginning of the last big leg before the last reversal to the downside, which is what we're trying to find the end of. and that is your major area for that swing low. Trend line from low to low, and then you have two midlines coming together right there at that point. All right, so that was kind of a long way to say what I'm saying, but to use the VWAPs just by themselves is probably a losing proposition, but in conjunction with everything else. You see here, if you were buying this low on the 2-minute chart, that looks pretty much nuts, right? Pretty well crazy. But you have such a huge slowdown in momentum. And let's see the 5-minute. The 5-minute, I think you have double divergence. Yeah, you got double divergence here in the RSI. You've got the stochastics going straight up as price is starting to come back down and test that low. And you've probably got that channel right there. All right, you've already come down to the channel once, but the median line is not intersecting the channel until way over here. But by the time it does, you're already well through it. So this would be, you're coming down and touching those three areas on the 20-minute chart at 43.07. So that's like right almost at the extreme low. And then waiting to get down into that cloud of the VWAP, well, you've been in that oversold area of the VWAP for, even before the open. So how do you know, when to get in or when to try to buy out of this oversold cloud? Well, you have to wait for all of your other areas to come together on the higher time frames. So you're still going to be waiting for your areas to be reached in your market geometry. But using the VWAP tool independently, or let's say using it in conjunction with each individual swing. Let's see. Now you're already well into it in here also. But you see how you're using that center median line, the center VWAP line as resistance as you're coming down. You tend to see that in just about every directional move. All right, so if you want to use that as a stop line, you can. I don't think it's as safe to use it, the exact price as a stop line. I think DB Vallejo does do that, doesn't he? Doesn't he use the actual VWAP as a stop? See, I don't think that's very safe if you're trying to get an extended move, because you're going to be consistently stopped out just as price is making a correction. So if you're using this, VWAP as an actual stop line, well, you would have been ticked out to the tick right here, right before the next big down move. Here you definitely, definitely would have been ticked out. But you see what's happening when it gets above that VWAP, it's immediately getting pushed back down. All right, so I would say the safer bet is to use the first standard deviation above and below. Yeah, he does use it. Okay, right. Bob says, yeah, he does. So yeah, I think that's a little dangerous because that's the actual area of support or resistance. That would be like me having my stop sitting right on the trend line or the channel line. You know how I say when I'm managing a trade, I always want my stop to be protected by an area. So I always want my stop behind that area that's potentially going to protect the trade. And I don't mean behind it by 1 or 2 ticks, like most people will trail their stop behind a swing low by 1 or 2 ticks. That's effective to some extent when you're looking at the structure within one wave in one direction. But if you're going to be trying to hold, if you're going to try to hold through pullbacks, how do most corrections develop? They develop in an ABC, a three-wave pattern, right? So if your stop is always behind the previous swing, then you're always going to be ticked out on a C wave right before it drops to the next level. And that's, you don't have to be trading for very long to know that that is well, it's just not a very good way to trade as far as stop management. And you typically don't want to let a stop consistently take you out of a trade. I know some people that will, enter a trade and the only way that they exit is if they get stopped out. Well, that automatically means that your exit efficiency is absolute garbage. And that's one of your most important metrics, is your exit efficiency. Well, your entry efficiency also, but with what we do, our entry efficiency is always pretty good, especially on the, well, anyway, so your exit efficiency would be, if I'm short from right here, if I go short right there from the Vwap, all right, and then I'm trailing my stop down behind every little swing that I see. So I'll trail it down behind here, and then it comes down a bit more, and I let all this develop, and then I trail my stop behind this, and then I get taken out right here. My exit efficiency is judged on how far did that trade move in my favor relative to where I exited. So if I gave back this much of the trade, well, that's over 50%. Let's see how much it is. You see that? So I gave back 55% of what I had made on the trade. So that's very poor exit efficiency. So you want to try to get out directly at the areas, right? You want to try to get out directly at the areas. So the Vwap may not necessarily help you define your targets, but it can help you in trying to get into some of these little smaller ABC pullbacks. Or for instance, if we're running a Vwap on, let's say, well, let's find a good example here. Let's go to the 240-minute chart. It can help you confirm where the end of those corrective patterns will occur. So for instance, if we had a Vwap right here from the swing low, let's bring it over a little bit. It actually comes pretty well through that one. We'll look back at some other examples here, but you see, if we wanted to wait, if we're looking to get in long into this move, we've already missed most of it, most of this initial reversal back up, but we're looking to get back long, right? Because we've obviously turned up. We've broken some pretty key areas here to the left. All right, so now we're looking for that big ABC correction, or maybe even a 5-wave overlapping, kind of a double 3 or whatever coming down. And we're looking to get long in here now, waiting for a move back to somewhere around, remember it's not a precise level, but it's an area somewhere within the range of that Vwap before we start looking to get long. That's one of the ways this thing can help us. Okay. So again, you don't see me really use the Vwap nearly as much as I use the volume profile tool, but see, even within the volume profile tool, you'll see me turn on that volume weighted average price, because from within profile, I can also display the Vwap with this button right here. Nope, right here. See? So we can turn the Vwap on from the profile as well. And then you can make that opacity or transparency, whatever level you want. All right, but that's just one of the ways to use the volume weighted average price. And that's why I've included it, because it does give you a pretty good idea as to where the ends of those corrections are likely going to come in. So I'd say it's more for trending moves. It's more for finding the corrections within a trending move. And that's on any chart. And I did this one so that you could actually plot this on the larger time frames, the daily 240, and kind of get a sense of, where this thing is likely going to come back to within an overall trend. So if we're going to be going into a trending move and we've identified the first leg up, for instance, that's a pretty obvious one there. That is obvious as it gets. Perfect 5-wave move. And then we're looking for a 3-wave move down. This one just happens to be a zigzag, which traces out incredibly perfectly in a 5-3-5 pattern. Where is the end of this thing likely going to occur? Well, you've got the Vwap area here, and then you have so many other reasons with all the market geometry coming together at that area. So it's just kind of a confirmation tool. It's just another area to add to the mix, and it's something that a lot of people do use, and a lot of professionals use. And then the cloud is maybe something not quite as familiar to some people potentially, but that's just a standard deviation above and below. So this first standard deviation would be considered the value area, and then, like we've already said, this is overbought and this is oversold, just based on the volume. The price, the volume traded at every price. And you can see when we get down into that value area, when we're in a strong trend, we immediately reject out of it. And then you can also kind of use this to start getting a sense of divergence. So it does help with that. When you start coming back down into the value area and then not quite making it back to the top, or let's say you're coming down, maybe not even necessarily making it into the value area, but you're coming down, and then when you go back up, you're rejecting before making it to the overbought or oversold areas, and then coming down into the value area, then you have a pretty good idea that momentum is waning and you're likely reversing. So you can go back and test that and see that all over the place. And then if you start actually breaking below it and pulling back to it and rejecting from it, then you've obviously changed direction. And you need to be running a new set. And to delete any or all of these VWAPs or volume profiles, you just right-click on the button, and it will delete all of them from the current workspace. So it's a pretty cool tool. Pretty cool tool. Let's see what we have here as far as this swing is concerned. And this is a 240-minute chart, so it's going to be using, let's see, how many days do we have here? That'll still be using range data. You can see when we came back, where did we come down to? This low. We found support when we started getting into the areas of overlap, right? So this is where we obviously had a lot of volume change hands, because we're coming up into these highs here and then rejecting down, right? And then when we come up, we just blaze right through it. I think this is a report day, 1 o'clock. No, I don't know what that was. That's just a big reversal. So anyway, that's the top of what is this little tan area here? It's the volume cluster, right? That's the top 30% of the volume within the least number of consecutive. So it's the 30% of the volume within the tightest range, within the least number of ticks of that range. Follow me? So it's the highest concentration of volume within this profile. And we're at the top of it right here. Right? Which would make sense because here you have the highest number of bars that are overlapping in these levels. Right? So we're trading back and forth in here. So a lot of buying and selling in these price levels. And then when we come back, well, for one thing, it's a pretty much perfect channel. And not quite down to the, I can't see behind that thing. I'm not sure if I've got it anchored correctly. Let's use the lower high. Right there. Yeah, now we're at the warning line there. So we break out of that channel. See, that's the perfect trade right there. That upper median line trade. You're breaking down, you're pulling right back to it, and then you're making it down to the median line, in this case, much past the median line. But where are you finding support at? The top of that volume cluster. So at the top, that's why I said you take each distribution individually. Well, this would be one distribution right here, this area. And if we're looking at the value area high and the value area low of this individual distribution, we would see a value area high likely right around in here, and a value area low somewhere probably around in there. And we're using the top of that cluster as support here. Now, like I'm saying, on a 240-minute chart, on your larger charts, this is likely going to be less effective. That's my opinion anyway. I haven't proven it statistically, which would be probably the least fun task I could imagine. Trying to do that and log it all in Excel. It's the kind of stuff you really have to do, though, if you're gonna, find some methods that work and make sense. But I've done all that for you as far as with market geometry and the relative volume. I've proven all that stuff beyond a shadow of a doubt. And obviously, I do it every day. But anyway, this is how I'm using the profile. But I prefer, like I say, to use it on smaller than the 20-minute chart typically. So really, you'll see me use it mostly on the 5, the 2, and then the 2 tick charts. And that's how I use it. So it's not, the end-all, be-all. I don't have to have an area in the market geometry to take a trade, obviously. But when I do, it just helps to confirm what I'm thinking, the area that I'm looking at trading, and all of that. And see, we're using the Vwap here, which is another reason I should have gotten out when we came down so fast and so hard. And this was our perfect little wedge. I got in pretty good on this one. I got in a little bit early, but it rolled over pretty quick after that. I got perfect trade location on the euro today, but just didn't manage to hold it. So if we're looking at this swing individually, we're trying to get an idea as to if we're going to come down and reject, where are we going to reject from? Well, just looking at, and this is why I'm doing the profiles per swing, so that I don't have to keep drawing these profiles all the time, especially for Ninja 8. It's going to be really, really nice. But if you're looking at just that profile by itself, and you see the volume that you have there, where would you expect a rejection from? If you're thinking in terms of, original theory, when we're talking about value area highs and lows, you'll see it's about finding value. So price will trade from one level to the next. All right, so it goes through trending and then range bound, trending and range bound. And when it's going into a range bound area, it's seeking to find value, right? They're considering that range bound area as prices reached value. So you'll tend to test the upper and lower ranges, and when you dip below them, you come down and this is the value area high. If we're looking at just individual distributions now, we're looking at this big distribution here. If we start dipping below that and then rejecting, well, it's not ready to go down yet. It's going to come back up here and go sideways or range bound or whatever. And then once it decisively breaks that and then pulls back to it and goes, well, then it's ready to go down and find the next area where people can agree on a price and find value, right? So you would expect in this case that once you start breaking out of that value area low, if you break out, if you're testing the bounds here and then you reject right back up into it, you know that you're not ready to go down yet. See, that's another reason why I should have exited right here. It's also a perfect to the tick hit of the Vwap of the session, which you see on the 2 minute here. And what else do we have? What is that big bar right there, which I identified at the time and said, well, if I were short 3, I'd take 1 off here. It's like I talked myself out of it. Big extreme churn bar, what does that tell you is happening there? Extreme churn bar to low, demand is coming in. Extreme churn bar to high, supply is coming in. Hey, Bill. Good to hear from you. I haven't seen you post in a while. Yeah, that is the name of the book. I think you can find that for free download from Google. Just be sure you don't, download one from some strange site and get a virus. Because believe it or not, there are viruses in viri in PDFs. I've done it. So anyway, then it goes sideways, and then what do you have? Another big churn bar. It's almost an extreme churn bar. See that? But then what is it in the true volume? In the true volume, it's nothing, right? Which is why we have relative volume and the density, more importantly, really. I should have definitely gotten out, taken half off right there. But that's as we come back and test the low of this volume cluster, the lower portion. See, as we start rejecting below, if you're looking at this as all one big distribution at the top, then another one right here, and there's your low volume node right there. Well, what's the exact price that we reject from once we come through here and test? It's that low volume node, isn't it? One tick away from it, which also happens to be the session Vwap. So it's a useful tool. I should probably use it more than I do. But I do quite a bit when I'm trading and analyzing and trying to figure out what's going on. It's pretty involved methods. So it can be a little difficult to keep up with, really. Another perfect channel. then here. Let's see, I posted the pictures in HIP chat. I want to say it was, where was it? Oh, I guess we could just look at HIP chat. Yeah. Right here. Hang on a second. When was that? September 21st. There we are. Yeah, so I was short back in here. And then, yeah, okay, from high to high here, we came down to that median line, but more importantly, we came down to, from back here, from high to high, which gave us this high, but then from this low, gave us the low here, right where that median line intersects the channel line. And it stopped on a dime and turned right back up. And then you get this big, nice A, B, C, A, B, C. So it's coming back up, but it hasn't taken these highs out yet. Thinking it's going to put in a lower high here, maybe all the way back to the channel, and then another wave up potentially. So anyway, that's it for now, guys. Anybody have any specific questions? I didn't have as many prepared examples as I would have liked to have had for this, but I'm trying to get that toolbar finished up. But maybe we'll do another session once I get the new toolbar and show you some better examples of how the stuff actually does work. And even when I download, still not have same colors. Then you've changed your colors and you need to go in and change them. Carlos, you change the colors in the properties menu. You may have saved a default for your indicator template, but you set the colors here on the toolbar, all right here. So go to the chart that the toolbar is on and open up the properties menu, and yeah. All right, thanks, Don. Carlos, so you got the screenshot there of the colors? All right, you guys. Everybody have a wonderful, wonderful evening. Tomorrow's Friday, yeah? All right, yeah, and I'll talk to you guys tomorrow morning in the trading room. Bye, everyone.